Scott, I want to start off by talking about a little bit of M&A to kick off this Monday, because we did get an exit from Postmates, not the public exit that perhaps it might have once upon a time looked for, but it's being bought up by Uber. How does it help the food delivery part of the business for Uber?
Yeah, thanks a lot, Caroline. Good being with you. So, look, this is a deal that I think people were possibly thinking about. We saw some consolidation in this category announced relatively recently when JustEatTakeaway.com announced its pending purchase of Grubhub. There was chatter that Uber was also interested in Grubhub. So I think a lot of people were probably thinking that Uber was looking to make a move. And when you look at Uber Eats, according to data from Second Measure, at least as of May, they had a little bit over 20% share in the U.S. Postmates had 8%. So that would essentially get them to the clear number 2 business in the category, behind only DoorDash. And it would put them ahead relatively clearly of Grubhub, which obviously is being bought by primarily European and Canadian competitor.
Yeah, talk to us about what's interesting is that there perhaps isn't going to be quite so much of a concern about the regulatory side of the equation now that it's not going for Grubhub, but going for Postmates instead. But what do you make of in terms of the focus now on food for Uber vis-a-vis delivery? Postmates made it smart by being, in general, a delivery service. It was doing pharmaceuticals and the like. But at the moment, we've seen Uber really try to scale back what it's doing. It's really focusing on food and transport rather than being all things to all people. What do you expect in terms of where it takes Postmates going forward?
Yeah, I think it's an interesting point because at the least, I think Uber probably has been pretty pleased at this point that it has a more diversified business than perhaps other more, let's say, focused ride-hailing and ride-sharing type companies, and even though I think it's fair to say that rides has been kind of the dominant segment within Uber for some time, I think that with the exposure to Uber Eats and further investing in that category, I think it's an indication that Uber is serious about, doing much more than simply moving people from place to place. Obviously, they've taken it from people to food, and then with Postmates, there's the possibility of, even more than that. And so I see them acknowledging the potential there. It is going to be interesting how that plays out, because one of the things that I think was noteworthy about the announcement this morning about the proposed combination was, I think within a year, $200 million in expected cost synergies. And so there's clearly some overlap and some opportunities there. But I think Uber's diversified business model has proven appealing for some investors for sure.
It's interesting that they are saying about those synergies, given that they're going to actually keep Postmates as a pretty separate part of the business. The management team is going to be staying on. So interesting how they achieve that sort of underlying efficiency. I'm also interested in how, certainly the public markets liked it. Uber basically made back all that it's spending in terms of market capitalization from the day's trading today.
I mean, Uber has been an interesting story. If you look at just the market cap, about a year ago, I think they got to around $75 billion in market cap. And then, as the coronavirus was really having its most significant initial impact in, say, mid-March, when lockdowns started to happen around the country, the market capitalization got to around $25 billion. I think today, as we have this conversation, they're close to $55 billion. So clearly, there's been some fluctuation, but the recovery perhaps reflects that more diversified business model and the exposure with Uber Eats, which look, based on what we're hearing, is something where there is momentum, there is consolidation in the category, which tends to be a positive for existing players, less competition, perhaps more pricing power, maybe better margins down the road. And those are all things I think that investors are looking for.
Cool, 56 billion market cap for Uber today, but it was a story of increasing market capitalizations across the board, really, for a U.S. investor right now. And the Nasdaq at a new record high, climbing 2.2% today. What do you make, Scott, of the valuations that we see, the domination of technology with Amazon above 3,000, Tesla, 40% increase over the last 5 days? Are you comfortable with these sorts of valuations?
Well, I can tell you at Third Bridge, we do not focus on valuation as a primary aspect to what we do day to day. What we do is we talk with industry experts and C-level executives about the world and what's going on in it every day to try to understand the big themes and trends, as well as the companies that are kind of driving investment decisions and success. And clearly one of the big themes is how some of these companies have really captured people's imaginations. And I think one of the reasons for that is this notion of digital transformation and the fact that, as Satya Nadella of Microsoft said, I think during their recent quarterly results conference call, we've essentially, according to him, have seen 2 years of digital transformation acceleration over the course of just a couple of months. And so clearly certain companies that have been positioned in the right places are benefiting, and other companies are having a much harder time. So those companies that are either selling the solutions that are enabling digital transformations, or the companies that are further ahead and doing better when it comes to implementing those transformations, seems to be the companies that are performing better and might be in more demand at this point.